Let's turn now to major news on the economy. A long-awaited move that's the talk of Wall Street and Main Street as well. The Federal Reserve not only cutting its key interest rate for the first time since 2020, however, it went further than expected, the largest reduction in 16 years. Here to break it all down, NBC senior business correspondent Christine Romans. Christine, we weren't sure if it was going to be a quarter point or a half point. If Savannah were here in person, she'd troll you face to face. It was a half a point. So what does that mean for the economy?
Yeah, a lot of people thought it'd be just a quarter point because the Fed chief likes to be very cautious. But this was a half point. So that is a jolt to the economy. And essentially, it's cutting interest rates. This is the biggest rate cut we've seen since COVID. When COVID happened, the Fed cut rates really sharply, and then suddenly inflation spiked, so they raised rates really sharply, and now we're starting the first step here of trying to get back to normal. So this is a big move that sends an important message to the economy that the Fed says we're not going to let the economy go into a downturn.
Let's talk about what that move means for people's pocketbooks, for people's wallets. The larger cut, does that mean folks are going to see even more relief than we anticipated?
I mean, absolutely. So you've had interest rates at this 20-year high for some time. People who buy a house, who finance a car, who have money on credit cards, you have seen these record high interest rates. Now, because inflation has come down, the Fed is saying, look, we're less concerned about inflation. Now we want to make sure the job market stays strong and other parts of the economy stay strong. So if you have a mortgage, I think in the months ahead, there are going to be a lot of opportunities to refinance that mortgage. Already, we've got mortgage rates about 6%. That's down 2 full points from where it was last year. It's expected to keep drifting lower. Also, the Fed's not over. The Fed signaled yesterday that more rate cuts are coming. So that's really important. Car loans and credit card loans, still very high interest rates there. They might be slower to come down, but into next year, that will mean relief for American households. You've also seen relief in the form of gas prices, guys. I wanted to show you what's happening with the gas prices. They are under $3 a gallon in 16 states, and nationwide, we're expecting the average could probably be below $3 by Thanksgiving. So that's another. So between lower interest rates and falling gas prices and inflation under control, it's just a little bit of a breath of fresh air for household budgets.
Good.
Christine Romans with the good news.
Christine, love it. Thank you so much.
Hey, thanks for watching. Don't miss the Today Show every weekday at 11 a.m. Eastern, 8 Pacific on our streaming channel, Today All Day. To watch, head to today.com/allday or click the link right here.